Darren Garman here. I hope you are doing fantastic, and I want to welcome you to another episode of the Heartland Multifamily Show. The place for all things multifamily, and I'm pumped up. I'm excited about this episode because we're going to talk about how to 10x, 10 times your multifamily investment, or maybe put another way, how to 10x your investment in multifamily. I'm going to give you 3 key strategies, 3 key things you need to know, 3 key things that you need to implement in order to 10x your investment in multifamily. I'm excited about this. I'm excited to share this information with you. So let's go ahead and let's get into it. Welcome to the Heartland Multifamily Show, the shorter, more profitable path to multifamily ownership and investing. All right, like I said, I am excited to go over this information, some what I call 3 key strategies, 3 key things to implement, to keep in mind, to work on in order to 10x your investment in multifamily. But before I get started, just a couple of quick things. Number 1, if what I cover on this episode resonates with you, if I make some sense to you, I love to hear your comments. So below, do me a favor and give me your comments. Would like to hear from you, would like to hear your opinion, and would like to have some dialogue with you. That's number 1. Number 2, if this makes sense to you, if this channel where we are all things multifamily makes sense to you to be a subscriber of, man, go ahead and click that subscriber button below. That would be great, just to make sure you don't miss out on anything. All right, so how do we 10x your investment in multifamily? What is it that we need to do in order to do this? I'm going to give you 3 key strategies, 3 key things you need to know, okay, in order to 10x your investment in multifamily. Now, I'm just going to tell you right up front, they are going to be things you're probably not expecting. So right now in the back of your mind, you're thinking, yeah, he's probably going to talk about this and that. So you probably have at least a frame of where I'm going to come from in this episode. And more than likely, I'm not going to be coming from that frame, because what I'm going to be talking to you about and keeping in mind and implementing, especially philosophically, comes from being involved in the multifamily business now well over 30 years. Okay, so let's jump into number 1. And I want you to understand this. The number 1 way, the number 1 philosophy in order to 10x your investment in multifamily is simply to keep this point in mind. Okay, it's not necessarily about the income, it's about the equity. In other words, the wealth is made in the equity, not in the income. The wealth, your net worth being built, continuing to grow and grow, is made in the equity, not in the income. So let me talk about that for just a second, because I may have surprised you a little bit with that. Now, first of all, am I saying the income is not important? Of course not. Heck, we need income, not only because we could, of course, use the income for a variety of things. And of course, one of the main reasons you invest in, whether actively or passively, multifamily properties is because, yeah, it's going to hopefully provide me an income, right? Now that's important. Income is obviously important not only to provide you an income, but you need enough capital to pay the expenses, obviously, from a multifamily community, obviously. Right? But see, the mistake a lot of people make is they get fixated on just the income. They get fixated on that. Again, it's important, but that's not where the wealth is made. Income is great. Income is fine. And income is important. But when you think about what builds wealth, it's the equity. It's the equity. So when I look at all of my experiences personally, okay, as well as my experiences rubbing elbows with some of the top multifamily owners around the United States over the last 3 decades, this is one huge principle that doesn't get talked about a lot. Okay. The fortunes that have been made by many people that we have heard of, both of us, we've heard of them, have been made not from the income. The income has been great. It's been made from the equity. From the equity. So just keep this in mind. Keep this in mind. The income from multifamily is great. It's important, but the wealth that will be built for you is based on the equity. So, where do a lot of time, effort, and energy, where does that need to be focused on? Right. Building equity. Building equity. Income's important, but building equity. Okay. Keep that in mind. Lock that in, because always remember, the biggest income or cash flow you ever get from a multifamily property is when? It's when you sell. It's when you finally sell. So the wealth is made in the equity. The income is great, but the wealth is made in the equity. That's point number one, in order to make sure, at least philosophically, you 10x your investment in multifamily. So let's go to number two. This is a big mistake a lot of multifamily investors make, both active and passive, by the way. And it's simply this. Management is the most important part of owning multifamily. Management. Okay? How you manage the property. How the property is managed by either yourself, maybe a third party, maybe somebody else, is the most important piece of 10xing your investment in multifamily. See, here's a mistake a lot of people make. A lot of people feel that, gee, Darren, I worked 3 months on this multifamily property. We finally closed on it. Oh, all that work is done. Finally, all the work is done. Now I'm just going to have somebody manage it. No. Your work, my friend, is just beginning. It's just beginning. Okay? Because from point number one, where I told you the wealth is made in the equity, how do you suppose you produce the largest amount of equity over time, and also the largest amount of income over time? You do that by having a great management team in place. Okay? Whether it's you, whether it's a third party, whether it's somebody you hire. And by the way, this is with if you're passive or active, it doesn't matter. Okay? You still need to have this important piece in there. Far too many multifamily investors treat this way too casually. Way too casually. They put all the bulk of their concentration and time and effort in the buying of the property. And of course, buying a property right, super important. Buying it so it cash flows, all that's important, obviously. But man, if you get this management thing screwed up, if you don't get this worked out, all of that work that you've done, all of the time, effort, and energy that you have spent on this in order to, I'll just say, build your multifamily empire, man, it's going to be all for naught. It's going to be all for naught. I've seen way too many investors make this mistake. They treat the management way too casually. They're not paranoid enough in overseeing and trusting and verifying their management teams. And they find out many times when it's way too late, man, I think we made a mistake here. I think we made a mistake in who we've got managing, how we're managing the property, etc. Okay, so look, don't you make this mistake. Understand that you want to 10x your investment in multifamily. You want to do that? Man, you got to have the management part of it right. And no, that's when the work just gets started. Sure, there's work to buying it. Sure, there's work in managing the asset, like an asset manager, but the day-to-day property management part of it. and asset management is where the empire and the equity and the income is built and rests upon. Don't forget that. All right. So far we've covered 2 ways in order to 10x your investment in multifamily, especially from a philosophical standpoint and an understanding standpoint, right? So number 1, remember, is the wealth is in the equity, not the income. Income's important. We like income. The more the better, of course. But the wealth that is generated is in the equity. So how can we spend as much time, effort, and energy on that equity piece of it? Okay, number 2, we talked about management. Property management, asset management. Hey, the work really starts when you take over a property. Okay, it doesn't end after you've purchased it. It starts when you take over a property. All right, so let's go ahead and let's jump into number 3. Now, number 3 is I got a feeling number 3 is gonna kind of come out of left field here for you a little bit, but it's important that we talk about this because I find that this gets in the way of many multifamily owners and investors achieving their highest and truest potential as an owner and investor. And it's simply this. You've got to understand and recognize that the more guilt and shame you feel about how much money you're making in income, how much you're making in equity, okay, the slower your progress will be to hitting your financial targets. Okay, so this is a mental roadblock thing. This is a mental putting your own brakes on thing I'm talking about. You see, I talk with a lot of multifamily owners and investors, and they tell me things like this. Well, I didn't raise the rent on the residents, even though they're all paying about $100 under market, just because I didn't really want to upset anybody. I didn't really move the utility costs over to the residents to pay instead of me paying those because I didn't really want to hear the complaining. And I kind of felt bad that, I've been paying this for a while. Maybe I shouldn't have the residents start paying for this now, especially since they're using the utilities, right? Or here's another one. I decided that I really like the residents that live in the apartment property we own, so I decided maybe it wasn't time to sell it. We're just going to hold on to it for a little bit longer. And instead of moving that money in maybe a property that might perform even better, I don't want to upset Mabel and Fred in that apartment, apartment 7. I don't really want to ruffle any feathers. You see, that kind of thinking, though understandable, is what gets in the way of many multifamily owners and investors maximizing the amount of return and wealth that they can build in the property. Why? Because in their mind, they feel some guilt and they feel some shame in terms of operating the property or properties as much like a regular business as possible. See, I call this the social worker syndrome. The social worker syndrome. By the way, I love social workers. My wife, Gina, has a degree in social work and was a social worker for many, many years. All right, so this is not a slam against social workers at all. But what happens many times is owners and investors go from owners and investors to social workers. Okay, so now there is a guilt and shame feeling if you're not helping more, if you're not providing more financial aid through maybe discounting rent, maybe letting people not pay rent for a period of time, maybe not doing the things to your property that could maximize the value from an asset management standpoint. You see what I mean? Many people start taking the business side of this way too personally, and it limits how far they will go as an owner or investor. Now, this should disturb you, especially if you're like a passive owner, if you're like a shareholder in a company that focuses on owning multifamily properties. I mean, if the person in charge is worrying about what other people will think, say, and talk about regarding just running the business as operationally efficiently as possible, that's a problem. That's a problem. And this gets in the way of a lot of multifamily owners and investors. I can't tell you how many times I've talked to multifamily owners and they tell me something, well, yeah, we just decided not to increase the rent over there. We decided to hold back on, we decided not to do it this way. We just didn't want to have anybody angry with us, upset with us. We just didn't want to ruffle any feathers. Look, it's your property. You're the one taking all of the risk with your investment. It is a business. You need to run it like a business. Okay, now look, is that to say that once in a while maybe you don't cut some residents or a community or some slack and help out here or there, or maybe do some charitable things here or there? Of course not. Of course not. It's not as if we're unfeeling zombies walking around, but you can't get into the social worker syndrome as an active or passive investor and expect to 10x your investment in multifamily. Why? Because you get in your own way, you put the brakes on yourself, and you're down the road 5, 10, 15, 20 years. You don't nearly have as much wealth and income, especially from all of the time, effort, and energy that you may have put into these properties than you thought. And whose fault is it really at the end of the day? It's not the government. It's not interest rates. It's not the market. It's you. It's you. Okay, so if you want to 10x your investment in multifamily, you got to get out of your own way with this and proceed in running it as a business and move out that social worker syndrome. Okay, so on this episode, I've covered 3 main points, 3 main philosophical points that can be implemented right away. So let's cover them one more time really quickly. Number 1, remember, income is important, but equity is more important. The wealth is in the equity. Income is important. Equity is more important. Okay, that's where most of your time, effort, and energy needs to be spent. Okay, that's number 1. Number 2, the rubber meets the road with property and asset management. That's when the work begins. It doesn't end when you buy it. You don't just simply hand it off to somebody and not do the due diligence, the time and the effort, energy in managing that. Don't take this casually. It is one of the most important things you can get right with management company, with management staff, with how you asset manage in order to achieve those financial targets, 10x those targets that you want to hit. And then number 3, you need to get out of your own way with any preconceived guilt, any preconceived shame of owning and running and managing and being an investor in multifamily properties. You need to move that social worker syndrome out of your way so you can run the business as effectively and efficiently as you possibly can. Okay, so you get these 3 things right. And I promised you, I told you, there were 3 things you probably were not expecting, were you? Right? But you get these 3 things right, my friend. You will find yourself hitting your multifamily investment targets, 10xing those targets sooner than you thought. All right, again, thank you for joining me on this episode. I hope this information has proven beneficial to you. Again, we'd love to hear your comments. Subscribe. Talk to you later. See ya. Bye-bye.